The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day from TFNN. Welcome to the May 8th, the wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 8 o'clock in the morning. That's right. If you're listening in live, or you think it's live at the normal 1 o'clock show, my apology, but a couple things come up and I needed to record this live. We'll be back at the normal time tomorrow. Of course, if you do happen to be listening, I would love to hear from you. So you can give us a call at 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com. In the subject heading, just put radio show question. And of course, in our Tigers Den, any ping will do. I'll make this show as pertinent as I can if you're listening at the 1 o'clock time frame, so you'll know what levels to be watching so that you can master the message of the markets. So let's go ahead and get this show kicked off. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So right now at 8:08 in the morning, we got Dow futures trading down 109 points. S&P futures are off 14. NASDAQ futures down 43, and Russell futures are down 8. Those are all about 0.5% to the downside. We can see that gold is trading up 450, so we'll cover that. That's trading out at 12.9020. Silver is basically flat at 14.93, as is light sweet crude, trading out at 61.34. A quick peek across the globe being, in this case here, you've got the DAX that is trading higher by 33 points. Well, that's kind of interesting, or something to think about. The only overseas index, or major overseas index, actually trading to the upside out here. So what can I do on the DAX? I don't really want to use these profiles out here. Let me just see if there's anything that I can try to find for us. And what I mean by that is I'm just going to put on a short-term time frame, a 30-minute time frame out here. So what's interesting is there was a low that came in on the DAX. Yeah, now this is a 30-minute time frame chart, folks. And in the 30-minute time frame chart, I just want to be able to look for, what I'm looking for is the bottom from yesterday. And the bottom from yesterday, May the 7th, on a 30-minute time frame, came in between 11 and 11:30, and the low was 12.056.80. And as price pulled back, it didn't take out that low, in essence testing that low and now trading above it. It did that at 6 o'clock this morning. So here, if we take a look at, here's the high of the low bar, which I'm referring to as 11 o'clock, between 11 and 11:30 yesterday. You'll see that's priced anywhere between the 12.056 and 12.088 level. So the question is the German DAX generating some type of early message for you and I? At this stage, the DAX has not busted out yesterday's bottoms. Kind of makes you say, something to think about. Now, look, at the 1:10 in the afternoon, you're going to know whether or not that was a tell or not. So how are we going to figure that out, Steve-O? Excellent question. What we're going to do is we're going to go analyze these markets. Now, we looked at a 30-minute time frame chart for the DAX. It's only fair that we do the same thing here in the U.S. market. So we're going to go take a look and begin our day, I guess, by taking a look at the 30-minute time frame charts for the equity futures contract. So if we bring over the ES Mini, here's what we're going to see. So we're going to see that nice slingshot Rhodes momentum indicator bottom pattern. You can see that it completed as we came into yesterday's close. That was between, this is a 30-minute chart, so between 3:30 and 4. But what we know is at the bottom, the bulls actually were showing up at 3 o'clock. We know that because price was moving lower, doing less relative energy. You had that little piercing candle that formed out there. But the real bullish bottom of this pattern actually formed at 4 p.m. yesterday afternoon. Now, we didn't see much thrust to the upside after that. A bit. In other words, price went from about 28.86 to a high at about 4:30 this morning of about 28.99. I guess it's a fairly decent move, 15 points up, 13 points, something along those lines out there. But in today's day and age, I'd have to go check on what the average true range of the ES Mini is, but it's more than 13 points. In any event, here's what we know right now at 8:12 in the morning. We can also see that price has not taken out yesterday's lows. Now, there's no bottom pattern here right now. In fact, when we saw price move higher and it made its high at 4:30 this morning, I don't have any kind of topping signal yet. There was a bearish structured profile on a 30-minute basis, and both on the one that formed between about 2,300 hours and then the next one that formed at 5 o'clock this morning with price below that, bearish meshes. You can see Stevie's red line is in fact red, so price needs to overtake that area, 28.79 and change right now, in order to suggest a counter trend rally, maybe even some kind of small A to B equals CD to the upside. But the U.S. markets, or the equity futures contract, or at this stage, all we can say is the ES Mini is producing the same 30-minute pattern, in essence, that we just looked at inside of the DAX. Now, look, if the lows from yesterday get taken out, we'll try to figure out where the next where the next price move is. We should really kind of do that right now because so we understand a smaller picture, but we should also get a feel for the bigger picture. So let's switch to take a look at the bigger picture, but let's switch to take a look at it this way. Now, this is our 4 time frame horizon using our market profiles to assist us in understanding support and resistance. And then the upper left, we've got the ES Mini. And yesterday, just by a smidgen, we saw the ES Mini close below the bottom of that profile, 28.94. First time that the ES Mini has done that since coming off of the December lows. What does that mean? That means we've seen a change in trend. Now, what we've also seen is overnight counter trend rally. Price rejected that 28.94 level. Old support has become new resistance. Now, this is a daily time frame. And so this is really going to be dependent upon what the end of this day looks like. With just closing below by a smidgen yesterday, I don't know if it's a true real break or not. At 8:15 in the morning, it looks like it is. But at 1 o'clock or 1:15 in the afternoon, if price is trading back above 28.95, it suggests it was a false break to the downside, which is kind of normal inside consolidating markets, which is what we are in. Look, before we go to this first breakout here, here's the real key. Notice the chart in your right-hand panel. That's the weekly time frame chart. The bottom of that box, 28.58. That's the key number for the day. If price is trading below that, all holy heck is going to break loose. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This show is being recorded today live at 8:18 in the morning. Well, between 8 and 9, actually, and being replayed for you between 1 and 2. But we're going to make this show as pertinent as we can. If you're listening in at the normal time, I'll be back to my normal time tomorrow, or should be. So let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you doing this morning?
Steve, I'm doing excellent, and thanks for taking the call. I just have to say parenthetically, it's terrific to have you doing your show at this time of day, especially given the market action the past couple of days. Gets us all set and prepared to handle whatever comes the next 8 trading hours.
Yeah, no, hey, look, first, thanks for that. And it is fun to do the show, certainly before the market opens, because we get to look at the different patterns inside the equity futures contracts and take a look at both sides of the trade out there. So I know that you're calling about the S&P 500. Is it the cash indice that you want to take a look at?
Yes, Stephen, I'll give you first a background and then a very specific question, please. First, by way of background, I commend you and Basil, actually a great many of the TFNN team, for scrutinizing closely and getting us prepared for what appears to have been the completion of the intermediate term uptrend in the S&P and its eventual turn lower, which I've been speculating is about to occur and has occurred. And, of course, the high that occurred last Wednesday, May 1st, in reaction to the rally in Apple stock in the wake of its earnings, the S&P got up to 2954 and now has turned back down. And most importantly, from my mind, is the up to the September 21st high of last year, 29.40. Tested it, got over it, peaked above it, but couldn't hold it. And given the price has fallen under your daily TAS profile, that 2894 level you've been highlighting, and the fact that the daily ESM9 charts, the derivative futures contract, formed first a Chapman wave leg G, confirmed with a peak G. And we all recall our former Tiger's Den associate, Saratoga Bob, finding that peak G sell signal tool. So it's worked beautifully. So I'm assuming the trend is now lower. And Steve, you know the way I trade. I don't like to make forecasts. I just like to be prepared. And in this state of affairs, I'm asking the questions, where can it bounce to? Where might it fail on bounces? So I can put on low-risk shorts. Of course, if it rallies past, I can take small losses. And then just cover shorts if I decline to lower lows when we get oversold. And then just do the wash, spin, rinse, repeat deal. So my very specific question is, in addition to what you've already highlighted, 2894 as being resistance, 2901 was a prior swing low. So, you know, we've got a 6-point, 7-point range there that it's obvious to all of us we can try to resell against. If we get over those levels, please, what are higher levels that you could see from your work that the S&P futures might fail?
So where I think, John. So let me see if I can. Let me start answering the question, and then you kind of keep me on the right path here. So the first, here's what we know right now at 8:22 in the morning. We know that key level of support at 2894 has failed, and as long as price remains below that, it says this change in trend signal is real. Now, that doesn't mean that we're not going to have some very large counter trend rallies in the market. I suspect we are. I suspect it's going to take people by surprise again, but it won't take you and I and all the listeners here by surprise. And we'll go through that and why that is likely to happen. But right now, the next key level to be watching inside the ES Mini is going to be 2858. And we just simply take a look at that. We know that that's a weekly profile. The cool thing is that's a profile that formed right now. So that's the play between the buyers and sellers that is on the field right now. In other words, the ball's been advanced. It's been able to have moved past the midfield out there, which we'll call as a 2894 level. And now sellers are going to try to press the metal, and they will press the metal and succeed and make their way towards the end zone if price is able to close below 2858. That is the next key level of support out here. Now, to go back to the fact that what we both agree on out here is that the S&P is also in a consolidation pattern. It's more clear in the Dow, but if we just simply look at the quarterly time frame chart here, John, for the ES Mini, and we take a look at resistance being 2885, you're asking where can price bounce to? That would certainly be a level that I would be watching. But where is it that price can pull back to? So where's the larger picture? If in fact what we just entered into while we're in the unfavorable seasonal cycle is a intermediate term top, there's actually no reason from a profile standpoint, and other levels will have to fail, where in the bigger picture, price could make its way down to 2467 or 2327 out there. Again, no forecast. I'm not making a forecast, just providing you and I with some line of sight work to help us understand where there's other support that maybe others would not have noticed. Now, the monthly time frame chart is really kind of interesting out here. This is the ES Mini. And right now, price is contending with the top of that monthly profile. So 28.92 is a key level. If come the end of May, prices closed above that, we're going to have to relook at the signals out here. But it's really inside the ES Mini on a monthly basis, John. Let's say for the month of May, what you'd really be looking for to give you that downside push information, that larger change in trend, I would say, would be a close below that 28.28 level. That happens to be the center of its profile. So the center box, and this is the lower left-hand panel, folks, that we're looking at, what that represents is for that specific time frame, monthly, both buyers and sellers believe that there's fair value. So a long-term trader would be saying, man, if price could pull back to 28.28, this would be the bulls talking, I want to take a position here. But we also know that the top of the box is where sellers are just simply lined up. Just think of this, I just like a football analogy out here, as understanding both sides of the team. And so since the center of the line of the box is closer to the top, if price can get below 28.28, then that really opens to move to 25.75. I know that doesn't answer all your questions. Why don't you hang on through the break and you can formulate what I didn't answer for you, and we'll go take a look at that too. Steve Rhodes with TFNN. We'll be right back with John in Philly. Take a look at the S&P 500. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. It's about 8:30 in the morning, so if you're listening live, thanks for doing that. I'm trying to make the show as pertinent for you at 1:30 as it is at 8:30. And so John went ahead and hung up, but he sent me a message here with regard to what is the next question that he was interested in, which is if the S&P futures contract bounces over, let's call it the 2901 level, what higher levels do I see as potential resistance? And so, John, the first way that I would answer that question is what pattern forms inside of the ES Mini? And here's what I mean by this. There's an A to B equals CD to here. Let me get rid of the retracements. There's an A to B equals CD to the downside pattern. I'm going to use this chart for, and we'll switch back to my other time frame charts out here. I'll have to in order to really answer that question. But there's an A to B equals CD pattern that is underway inside the ES Mini. And the A point, B point, and C point took 3 days. The A point was the high from May 1st. The B point was the low from May 2nd, and the C point of this lightning bolt pattern was the high from May 3rd. Now, what we can see here is that price yesterday was able to attain the 1.272 level. And today, in essence, it's testing that area. What I don't know is whether price is going to go down and test 28.52. I don't recall what was the, let me see here. I'll recall in a minute, 28.58. So 28.58 is the bottom of the weekly. The 1.618 A to B equals CD. Expansion is 28.52. There's your range. Now, what I'm trying to get at here, and let me get at it, is we have a, look, here's the deal. If there's an A to B equals CD pattern that completes, and by complete, folks, it means on a daily time frame chart, Stevie must see some type of bullish reversal candle. That's not what we're looking at 8:32 in the morning. I don't know what it's going to look like at 1:32, but at 8:32, it's not a bullish reversal candle. So price could move lower. The reason why my answer to John is dependent upon what pattern forms here is if an A to, I'll get it out. If an A to B equals CD pattern forms, folks, this will be, just want to make sure I'm really clear on this, because this show is going to be followed by Larry Pesavento. And he would reiterate this too, I believe. If this turns out to be an A to B equals CD to the downside, it is the first Gartley buy pattern off of, on a daily time frame chart, off of the lows from December. And what did H.M. Gartley tell Larry Pesavento personally? Buy the first Gartley buy pattern in a bull market out here. So we want to be paying attention to that. Now, look, from my standpoint, here's the deal with regard to a Gartley pattern out here. A Gartley pattern has 5 potential outcomes. We never know which of those 5 it's going to pursue, and we have to be paying attention to daily charts. Let's assume at this stage here, because I don't have anything else to assume or base things on, let's just assume that yesterday's low today somehow ends up being a bullish reversal candle, John. Well, then the first 4 outcomes are retracements of the entire pattern out here. Well, 0.382 is a foregone conclusion. That's 2,900. You're asking where is price going to go above that? So that says 29.23. Just your basic 0.618. Above that, 29.40, and above that, all the way back to its highs. Of course, the 5th outcome is an A to B equals CD to the upside. I'm not forecasting that just yet, because we don't even have the completion of an A to B equals CD pattern. So I can't really, I'd have to go with the data I have now, but the data is more likely to change. And when we have that new data, then it'll become easier to guide us as to where potential areas are. That being said out here, that's the potential to the upside, okay, that John and I are discussing or taking a look at. Here's my other chart here. This shows the 7th wave move that John was referring to, letter G. Price was also moving higher, doing less relative energy, generates that bearish reversal candle that completes these patterns that are out here. And now what's unfolding, even though we've broken through support on the daily profile, we cannot be ignorant to not be watching and recognize that there's an A to B equals CD pattern that's moving to the downside that could, in essence, generate a Gartley buy pattern. The first one on a daily basis since the bottom on December the 24th, December the 26th out there. Here, John, as far as price area where price could bounce to, we would have to say it's Stevie's green line, and that currently is priced at 29.39. But that's going to be changing over the hours and so forth. We don't have a bottom pattern that is in play out here, and really, if the Dow is going to be the indice that's providing you and I with the most amount of information out here, and it may be, here's the problem in River City. And let me just get rid of it's also A to B equals CD pattern out here. And A to B equals CD patterns can fail. And the one from, it's possible, it's probable that the A to B equals CD pattern that confirmed 2 days ago when a hammer candle was generated on May the 6th out here. The reason why I hesitate just slightly is because yesterday was nothing more than a test and rejection of that area. It was a test here. Let me just draw a blue line. You'll see whenever you close below the bottom of a hammer candle, you know, the expression we like to use, the expression that Peter in the Den likes to use is, hey, if you're long, you're wrong. That didn't work real well. Let me draw this line right here. The reason why I hesitate just a tad is I don't know what today's outcome is going to be. Is today just a test of that hammer candle as well and price closes back above it? Well, look, if price closes below it, by the way, in the YM, the bottom of that hammer candle is 25,932. We're going to go with Peter's expression. If you close below the bottom of a hammer candle, if you're long, you're wrong out here. And so this just simply suggests a further or larger A to B equals CD pattern in play. By the way, in the Dow equity futures contract, there was a butterfly sell pattern that completed up at that dark cloud candle. I'm not going to go ahead and draw that in. Instead, I'm going to just work on the A to B equals CD pattern out here. And really, there's a couple that we could draw in. Here's what I would. I'm going to draw in the easy one, which in essence is the same as what we looked at for the ES Mini, and we'll just simply go with that. So the next downside price target here is 25,639. So 25,639. Let's try to remember that, and let's go over and take a look at this set of tools here. Let me put up the Dow Equity Futures contract for us. So this way we can look at daily, weekly, monthly, and quarterly profiles out here. And so the next stop to the downside, because price is well below the daily profile, subject to some type of bullish reversal candle forming. Pay attention to the hammer candle from 2 days ago that held support yesterday. If price closes back above that, that's a signal to you. It certainly should be a signal that the bulls or the buyers, and I just use bulls directionally speaking and bears directionally speaking out there, because what we're in is a consolidation. We're in a consolidation. We are in a consolidation. I'm sorry, I've said that twice. I just wanted to make sure that I was clear on that. We're not in any kind of bear market out here. We're in a consolidating market, and they're very difficult to navigate and trade. But the next downside price target of support from a market profile standpoint, I don't mean to speak with such conviction, but I do mean to speak with such conviction. The next downside price target is 25,395. That's quite a bit lower than the 1 to 1.618 A to B equals CD to the downside. Nonetheless, that's potential support. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. If you're listening in at 1:42, the show's being recorded. It's now 8:42 in the morning, but continuing to try to make it pertinent for the day's action out here. And one of the things that I had mentioned earlier was that I want you to anticipate a very large counter trend rally. So at this stage here, we've got change in trend signals. Not until the highs get taken out will we change that market outlook. We know we're in a consolidating pattern. It's clear as bell out there, or as clear as whatever clear could be. But the reason why I'm saying, and I want you to be careful. Look, if you're short, I'm not telling you to close out your shorts. What I am saying is make sure that you've got some stops in place and get taken out and save some of that bread. And the reason is why we could get such a large counter trend rally out here is just simply things have gotten way out of whack. Now, the way you and we can be a chiropractor to understand when the body is out of whack, and the body of traders is out of whack out here. Now, how can we make that conclusion? We make that conclusion by just simply taking a look at the so-called fear gauge, which you and I don't use as a fear gauge. We never even call it that because that's hogwash. That's a bunch of garbage out there that we can't use to figure out what the market's communicating to us. But what we can do is really understand the present spot volatility index priced at 2075. And yet the volatility index in the futures contract, even May, is $18 and change. And $18 even Steven in June. In July, $17.92. And December, $17.70. And this is called being out of whack. And when that out of whack corrects itself, it'll correct itself by getting back in line. And that means the spot volatility index will get below all of its futures contract, and it will be one huge slingshot. One huge slingshot. So just prepare. Be in a consolidation market. What you really want to do is be nimble and be able to trade both sides of the market out here. In a consolidation market, that's how you are going to make the best of it. Now, look, you can take the approach, and that's fine. You can take this other approach out here. Let's just pull this up on the screen, Give me a moment here. We'll find it. You can take this approach. When's the best time, if you want to look at an intermediate-term trade, when's the best time to sell a top? Well, when you're up at the top. And so you're near that level right now. And if you're not short, I say wait for that next counter trend rally to go ahead and take that message and possibly ride price all the way down to the bottom of the consolidation. Whether it's 23,370 or some other level out there, I don't know. So you could take that approach. To the extent that you're a trader out there, I say you got to be careful. You must be careful. Look at the ES Mini out here on its weekly time frame. Just so you know, all it's done so far for the week is test support. Support is Stevie's green line out there. So you've got and that's priced at around 28. Man, I'll give it to you. When I say I'll give it to you, I mean I'll give you the right. That's not it. Darn it, that's going to pull something up that I didn't want to pull up. Not that I didn't want to pull it up, but I didn't want to pull it up. Here's a data box. So let me get you the exact number out here, because this would be an important number to be paying attention to today, tomorrow, this week for sure. And that is the level of 2867. Let's call it 2867. So far, all we've seen on a weekly profile is a test of support. If price closes here, the current TD setup 9 count will vanish. It needs to have 9 consecutive closes above a close of a bar 4 bars before that. And we're not at that space right now, but it's too early to call the week. But just want to keep it in perspective that price is at support inside the ES Mini. It's only the Dow. The Dow. So probably watching the Dow is really going to be important, because it's the Dow. For example, the Dow, even on its weekly chart out here, is trading below its Stevie's green line out there. And that just suggests further retracement inside the Dow equity futures contract. But if we pay attention to it, to look for signals, then we might be, because that's the week, by the way, folks, that is the week indice out here right now. It is the Dow. And I say that based upon taking a look at both profiles, Stevie's red and green lines out there. And, you know, all I have is wave number 4 on the 30-minute chart out here. So it wasn't giving the same type of bottoming signal as the ES that we looked at, as well as the NQ. So anyway, so let's go ahead and change gears out here. But I just want my goal is to prepare you so that you can anticipate out there. And what I'm telling you or sharing with you is the biggest tell, and to be careful about a huge slingshot move. Don't get overly bearish here. Expect it when you least expect it out there. And then when it happens, well, you've expected it. So I would be watching for that. Now, if the configuration of the futures contracts and the VIX change, then we'll be able to change that signal. But we have to go with what we know right now, and that's at 8:47 in the morning out there. For you gold lovers out there, maybe today is the day. And what do I mean by today is the day? Well, if we take a look at it, looks like price is going to go ahead and target its descending trend line. The descending trend line is right in this area here of about 1295. Let's just call it 1295 even Steven. Look, you can draw this trend line. It's real easy. Just start with the high from February 20th and then pick up either the high of March 25th or the high of March 26th. Either one is going to work out there. And so price right now is targeting that. I would say if you see a close above 1295 today, what the chart for gold on a daily basis would be confirming for us is that 7th wave move, that letter G back on May 2nd, that was a significant bottom. But right now what price is doing, so be careful here too. Anticipation. Price is headed into a level of resistance that was established back in February. And price needs to close above that in order to signal that price is going to go ahead and move higher. So, and for those of you that are long gold and long the miners out there, this is what I would say would be the most important chart for you to pay attention to. Now, also at 1295 or in that general vicinity, let's go take a look at the so-called general vicinity. Means we take out the weekly time frame chart. And the weekly time frame chart here also signaling to you and I, and there's your Gartley sell pattern, by the way, that took place here when price when it made a shooting star back in March, and then you move lower into a TD setup 9 count, the low coming in on the bar following bar 9, which is perfectly fine. But here at 1296.10 is Stevie's green line. So I said $12.95. I meant $12.95, but now we're going to change that to, as long as we're $1 away, $1.10 away, what you need to see today, or at someday. You need to see it close above 12.96.10 to have broken a descending trend line and to have closed above Stevie's green line out there. So that is what's going on inside of the gold market out there. We take a look at what else you want to take a look at. Lyft. Lyft was out with earnings last night, right? So Lyft here is really tried to form a bottom. LYFT. What did I just do there? I screwed that up. No more gold daily contract. It's now Lyft. You can't see it. It's off the side of the screen, but come on. What's Lyft trading at? I guess I'm going to have to tell you when we get back from this break. This is Steve Rhodes with TFNN. S&P futures up 7.5. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the trumpet, once again, out there, a tweet that which was why my system kind of froze up because all the futures contracts were going kind of crazy out here. Look, it's 8:54 in the morning if you're listening live. Thanks so much for doing that. I'll be back at my normal programming time tomorrow, or most certainly should be. So what are you going to watch for today? I think, and we've really covered this. I don't want to beat a dead horse, but just in case you're tuning in, maybe early to listen to Larry's show, I'll leave it to you. I'll leave it like this and take, the NQ. We really didn't cover much of the NQ. So that is perhaps where you're going to get your biggest signal for the day. Right now, the NQ is testing support, and the support being the bottom of its daily profile. And we've not seen it close below the bottom of a box inside the NQ. So if there's really a change in trend signal, there's two of the equity futures contracts. We're just going to focus on one, though, and that is the NQ. So watch the level of 76.26. If it's if it's 1:55 in the afternoon and we're trading above 76.26, what you know is the NQ has held support. Where can price bounce to in the NQ? The first level is 76.82. The next level is 77.67. That's just simply within the daily profile out there. So watch the NQ, because I seriously doubt the markets are going to crack to the downside unless the NQ decides to crack. And as we speak right now, even as poor of a performance as it was yesterday, let us not forget that the trend is still our friend. And inside the NQ, it has not been broken. You can't break the backs of the bulls and the buyers in the NQ until you see it close below 76.26 out there. So, folks, thanks so much for being here. Of course, listen live to Larry Pesavento. He's up next, of course, if it's the 1 o'clock hour you're listening in. Then my favorite polar bear, David White's up next. Tom O'Brien from 3 to 5. Thanks for being here. We'll look forward to seeing you on Terrific Thursday. Have a wonderful Wednesday.